Best to worst creative real estate investing financing strategies. Hey gang, this is Mike with MrNoFluff.com, and today we're going to be talking about the best to worst creative real estate investing options to finance deals in real estate. Now, what is creative real estate investing? Creative real estate investing is a strategy that doesn't use the traditional way, the customary way. The traditional way is hire a real estate agent, go to your local bank, and sign a bunch of paperwork and get into debt under your own name. Okay, the creative real estate investing strategy does not go the traditional way. It creates its own path and is very, very flexible. And the end result is that the investor, like myself, don't have to borrow money from a bank. And what I do is I allow the seller, the homeowner, to basically finance the deal for me. Okay. Now, it doesn't matter if this is an entry level home, if this is a multi-million dollar home. It doesn't matter if I'm trying to be a landlord, if I'm trying to do fix and flip, if I'm trying to wholesale. It's a great strategies to have. Now, creative real estate investing is many different strategies categorized as lumped in as what's called creative real estate investing. And today I'm going to talk about the best to worst. Okay, so, but before I put them in order, I want to go ahead and run down what the couple of the creative real estate investing strategies are so you can have them. And then I'm going to put them in order, okay? So let's go ahead and get started without any further delay. Before I forget, guys, one quick reminder is that I highly recommend you guys join my academy. It's $67 a month right now. We're having a flash sale. You get access to all my courses, my best-selling courses, advanced, beginners, mid-level, courses that normally I sell for $3,500, which is $3,500. My mother course, like my VA Exponential, where I sell for $1,500, and you can get all these courses plus one meeting a month coaching for just $67 a month, guys. It's unbelievable. So you get one meeting a month coaching in a small group setting, plus all my advanced courses for just $67. It's unbelievable. The crash is here, and I'm putting this information out there so you guys can get it for just less than a cup of coffee, guys. Okay. The other thing I want to let you guys know is that if you guys haven't joined my profit sharing, you're basically shooting yourself in the leg, guys. Okay. I'm not here about me selling you stuff. I'm here to help you do deals. The market is crashing. We're already in a recession, and subject to heaven is here. And I want to do deals with you. Okay, I want to do deals with you. I want to get to meet you. So if you get your money right, which is very, very affordable compared to other institutions out there, is the profit sharing is $14.95, guys. $14.95, and what that gets you is a year worth of coaching. We meet every Saturday, and we go over your deals. I answer your questions: how to find sellers, how to filter them, how to negotiate, how to give offers, how to structure, how to renegotiate, how to follow up. Everything you need to, from getting the deal, finding the deal, financing the deal, and then taking it to the title company so you get your check so we can split the profits, guys. Okay, and that's at my profit sharing coaching, guys. Now let's get back to the business, guys. The best to worst creative real estate strategies to financing your deal. Okay. Now, before I go into the orders, I want to make sure I break it down for you guys so you know all the options, or not all, some of the ones that I've used myself. Okay. I'm listing it here for you. The very first thing is called a master lease. Now, a master lease allows me to work with the home seller and take control of their property without buying it, without closing on it, without funding it, just through a simple lease, what I call a long-term lease, master lease. Okay, and I normally will rent their property out for their mortgage balance, which is called PITI, and then I turn around and I rent it out for a positive cash flow. A simple example is, let's say the mortgage balance, their monthly payments is $1,000 a month, and the property will rent for $1,700, and I'll do it. I'll do that deal because every month I'm going to get a 700 positive cash flow after I pay the landlord. Okay. Now the other benefit is that I don't own the property, so if the AC breaks, it's not my problem. Okay. Another benefit is I don't have to go with all the cash. I don't have to have good credit or bad credit. The credit is not required. I'm not going in there as a renter. I'm going in there as an investor. And this option is a great option when the seller tells me, I'm just going to rent it out. I'll just say, hey, why don't you just rent it to me? Okay. Now, that's what a master lease is. I don't own it. I just control it. The seller gets all the benefits of ownership, like tax deductions, um, depreciation if this is their investment property. They get the interest write-offs. They get the equity build up, appreciation. They get the equity debt pay up down that builds equity. So the seller gets all the benefits of that. I only get one benefit, which is the cash flow. So I get the monthly cash flow, so I don't have to have a job. And yes, I have to do some work like babysit the house, but it's not too hard for me. Okay. Now let's go to the next option. The next option is what's called a rent to own. And I know a lot of people say, hey, well, this is just a rent to own, a rent to own. So what is a rent to own? A rent to own is basically a master lease plus a plus a option. Okay. Um, that's what a rent to own is. Let me fix my pen real quick, guys. There you go. And plus an option. So we know what a lease is. A lease is, look, I'm going to rent this house for your mortgage value for 5 years. Okay, that's what a master lease is. And then we add an option. An option says, that, look, Mr. Seller, I may buy your house. It's not guaranteed. I may buy your house 5 years down, but it's up to me if I exercise this right or not. Okay, so if you cope this together, then this can be called a rent to own. Okay. Now let's go to the next creative real estate financing strategy. Next one is called a straight option. Okay. So a straight option is where I meet a seller. Maybe I don't want to rent their home out because it doesn't cash flow $700 a month, or it's for whatever reason I don't want to do it. Okay. But usually it's because it doesn't cash flow the way I wanted the cash flow, but I know that area may appreciate in value. So a straight option is, hey, seller, I couldn't buy your house for cash. We couldn't do one of these other strategies. Well, why don't I just give you some money today, a small amount of money for consideration, and I'm willing to, put an option contract on the property, and I might exercise and buy it 5 years down the line or 10 years down the line. So this is a good time to break down what an option is. An option is basically a one-way contract. So this is me, and this is the home seller. An option is a one-way contract where I give the seller a little money, okay, and then for the option, and then the seller will guarantee that I have the right to buy their house in the future, but I don't have to exercise my option. So I don't have a two-way commitment. It's just a one-way commitment, okay? So the commitment is from the seller to me that if I decide to exercise my option, this seller has to sell their home to me. But there is no commitment between me and the seller. A normal contract is not like a normal contract. A normal contract, so this is the seller, it's a two-way street. I have a commitment to the seller to buy their home at a certain date, and the seller has a commitment to me to sell their home to me for a certain price, okay? So that's a normal purchase contract. But in an option, I don't have a commitment to the seller. I may do it, I may not. And that's why, it's a very favorable thing uh, for me, because if the market tanks, right? If the market tanks, then I'm not going to exercise my option, right? Why would I exercise it? It just doesn't make any sense. Now, if the market doesn't tank, and the price, when I was talking to the seller 5 years ago, the house is worth 100K, and today is worth 250 or 200, then I will exercise my option. Say, look, I want to buy it. So that's an option. An option is a one-way obligation, not two ways. Um, Now, we're coming to one of my favorite strategies, which is called a subject to. If you want to watch the remaining of this training, then just join for free our community. The link's below in the description. and you can watch the remaining 15 minutes of this video. This is almost a 25-minute video. So if you want to watch the remaining of the video, join the community. It's totally for free. You get to meet me, you get to meet other students, you get to meet other people in the community that are interested in investing in gold, investing in real estate, investing in cryptos, and you guys can bounce ideas back and forth. On top of that, I am releasing the remaining of this video and a bunch of other videos on my community forum for the members only. So there's no cost, it's free. Join right now to watch the remaining 15 minutes of this video. Thanks again. Click the like button if you want to invest and support this channel, support yourself, get into the profit sharing, get into the academy, get into the REI club. Now let's meet and let's make your dreams come true. Peace.